Hello and welcome to the stock analysis of BYDD. The company is built BYD Company Ltd. This is the Chinese company and requested by Sean on one of subscribers on my channel. So basically this company is also the part of the ARC Autonomous Technology Robots ETF, and you can see how much shares hold by them. If I see what's the company overview again, this is a research development pretty much on the electronic vehicles and energy batteries. Right now the stock is at 38.55 with a market value of 60.5.6 B. The ticker name is BYDD, just to let you know. And if you quickly go to the website, you will see their product and solution is they have the cars, commercial vehicles, energy and electronics. So they are more into the batteries, and it seems like they are also doing the car. Feel free to check it out. So in this one, we'll focus on more on the valuation side. If you compare the company with the industry, we can see the margins are quite good, 16% for the last 12 months. And if I compare with the own margin for the last 5 years, this is a little bit shy of 1%, but still not bad. Whereas the net profit margin comparing to the industry is half, which is not a good sign. But usually in the early days, this company is not that it's established in 1995, so still pretty young company. So maybe they're doing more on the R&D and all. So let's quickly look into the valuations. If I as you know, I use the free cash flow model. So the numbers which I got from the data is from the Hong Kong dollars, right? So these numbers, this is percentage, okay, and then I converted usually using the 0.13 as exchange rate. So and then convert into as per the share outstanding with the per share value. So if growth rate I'm using is 22.58 and I depreciate the growth to 10%, which is very conservative approach. I think based on the electronic vehicle, the company should maintain its growth rate, or at least if it goes down, should not go down that much. But when we value, you never know after 10 years, and so better to be conservative than sorry. So here you can see, okay, and then I use the 10% discount rate. As you can easily see, the market price is way lower than their intrinsic value. One way to look into these are not purely exchange traded. This is the OTC. So there is very less liquidity to this share. So if you can come back here quickly, I think I didn't see. Okay, yeah, you see the market vol is only 193K, right, for the last 65 days average, right? So that's not that's one of the reasons as well. So hopefully the more and more people know, or if it's more freely exchange traded, then the price can easily be picked up. So that's one of the risk I see there. I'm not invested in this one because I do have investment in other electronic vehicles and all. So just wants to give some independent opinion and the facts. If I see from the 10-year perspective, I can see the pretty good IRR on this one as well. So the last and not the least, if you go here, one of the, and you might be Google, you can also find the Berkshire's the company. They have they own some of their subsidiary, not directly Berkshire, but their subsidiary own this company as well. So yeah, that's about it. If you want me to cover any other stuff, feel free to put in the comments. Otherwise, feel free to drop that like button and subscribe to the channel if you want. Thanks for watching. See you soon, hopefully in next video. Bye for now.